Hello and welcome to today's Dalal Street Week Ahead video. Now in today's Dalal Street Week Ahead video, we'll be taking a new look at the news that will be affecting our markets this week. Plus, we'll take a look at Tata Motors passenger vehicles. I'll take a look at it from the perspective of an F&O trader plus an equity trader. Now, Tata Motors is one stock I had covered on 14th deck, and since then it has managed to go up as I had predicted, and it has stopped at the first resistance level that I shared. So I'll take a look at what I believe will be happening to it in the January series of the option chain, plus also what is going to happen to it in terms of simple equity trading. Now, before we look at Tata Motors, the news will be affecting our market this coming week, I believe, is really only one, which is that on 31st December, the FOMC minutes are being released. So that will naturally affect the headline indices, as that's a major high impact event. So apart from that, I don't see much happening because this is a holiday period, and even we can see by the volumes, as for example, our markets are having a low VIX environment too. So that all will have to be adjusted, but I think everything should pick up once the second week of January begins and everyone's back from the holiday spirit. So that's really it on the news front. Now let's take a look at Tata Motors. I'll talk about it from both perspectives. Now, I have highlighted via the green line where I covered Tata Motors the last time. When I covered it on a video on 14 December on YouTube, you can check it. I had said that I believe Tata Motors will be holding 340 rupees, and due to that, I'll be going long in it for a target of, I've given two targets, 355 and 368. Now, Tata Motors has gone and met both the targets. It broke past 355 resistance, nearly touched 368. I think it missed it by about 1 rupee. So that plan has worked out very well. But now why I've chosen to cover Tata Motors again, as in that video I had said I'm going long via equity, plus I'm going long via P cells. Now the P cells I had entered of December series, and I had also entered some of January series due to us being already halfway through the December series option time frame. So now how I'm going to be handling it in the coming sessions, before as we are approaching December expiry, I'll be naturally booking all the P cell profits which have been made of 340 and below, as they weren't expiry profits because of decay, and on top with the low VIX environment we've been trading in, that has helped sellers, and as options have decayed very nicely. So I'll be booking those profits, but via equity I'm still holding, and I plan to continue holding as long as Tata Motors stays above 357 rupees. As if it can sustain above this, then it will be going out to break 368 in the coming sessions, and if it breaks 368, then it goes to 390. But as I said, 357, 358 is where my profit stop is. So if it goes below that, 357 basically, then I'll be profit stopped and I will be out of the equity position. I look for a new entry somewhere around here. Also, on the January series, I do hold PE cells already of 340 and below. If I see it's holding 357 and it's trying to break 368, then I might go and sell puts of below 360 rupees to earn from the incline. This is, I believe, Tata Motors. It has given us a up move already in a period when most of the market has been extremely fragile. So if a bit of strength comes in the market, in the broader market, then it can break 368 and go for up move to 390. So my overall trading plan for Tata Motors is pretty simple. The PE cells which I had shared on 14th deck, I'm going to cash them out because we have reached expiry. And then the equity position, as long as it's above 357, I'm going to hold it with a profit stop. I believe it will break 368 and go towards 390. By chance it breaks 357, then I'll cash out and I'll look to enter it again at a later date. And also I hold, as I said, January PL, which are in a profit. So I am remaining bullish on Tata Motors. This is, even if it has a small drop, 340 is a very strong support, and it has proven itself. This is, if you look at it historically, it has not used 340 as a support before. Last time it stopped was around this point, and that support was broken. But 340 has proven itself because, and it is where there's a lot of money which has come in, fresh, big money, not the retail money, which will run away at a small sight. So as long as above 340, I will maintain my bullish position in terms of P cells and above 357 in terms of equity. So that's the trading plan for Tata Motors. If you like this video, then hit that like button, subscribe to the channel, and also click the notification bell. Thank you.